Penny stocks. Penny stocks refers to shares of small cap companies that trades at a lower price, typically under $5 per $5 per share. You know, though definition may actually vary. If you want to apply this particular criteria to the Nigerian stock market, you discover that almost 90% of the stocks that could be classified as penny stocks. So this particular criteria is applicable to the US market, $5 and below. I think the highest traded stock in the Nigerian market is I think it goes for about 5,000 naira. All right. So you discover that majority of the stocks in the market in Nigeria could be classified as penny stocks. So this particular criteria, this particular arrangement doesn't really define our own market. All right. So these are stocks often associated with smaller emerging businesses and are traded over the counter. You could buy them at over the counter markets or maybe smaller exchanges. Though some are listed in major exchanges as well. That's what penny stock is all about. So with explain penny stocks, I want to talk about how you could safely invest in penny stocks. Let me highlight the key characteristics of penny stocks. Number one here is low price. Low price, they are typically affordable, making them attractive to retail investors. They are very cheap when it comes to per share basis. They are low priced, below $5, and they are somewhat attractive to retail investors with limited budgets. Not only that, they are highly volatile. Prices can fluctuate significantly due to low liquidity and the speculative nature of penny stocks. Not only that, there's low market capitalization. They have low market capitalization. They represent small or micro cap companies with limited market influence. These are small emerging companies just starting off in the markets. There's limited information concerning them. They often lack comprehensive, detailed financial data or analyst coverage. So analysts tend to ignore them. They don't really cover penny stocks. And that's why there's that increasing risk of investing in penny stocks because there's no analyst endorsements. So there's high growth potential. That's what tends to attract some investors into owning penny stocks. They have high growth potential. So opportunities for substantial gains if the company performs well. If the company performs very well, you discover that there's that above average potential for growth compared to larger cap stocks. So how to invest in penny stocks safely? How do you invest in penny stocks safely? Number one, you do your research. Do your research thoroughly. You understand the company. Study its financials. You study the management, and also you critically look into the company's growth prospects. Not only that, you check for transparency. Prefer companies that provides regular and detailed, disclosures about its financials. Number two is use reputable platforms. Use reputable platforms. So you stick to regulated brokers and platforms with access to credible penny stocks. Avoid, dubious over-the-counter markets. So make sure that you align with reputable brokers when it comes to investing in penny stocks. Number three is set a budget. You need to set a budget, and you invest only with what you can afford to lose. That's the advice, what you can afford to lose. The high risk involved means you could lose your entire investments. So put what you are comfortable, with losing, maybe a tiny percentage of your overall net worth or your overall portfolio. Number 4 is diversify your portfolio. You need to diversify actually. Don't rely solely on penny stocks. Balance your portfolio with established companies and other asset classes. Don't just have run a portfolio that is 100% penny stocks. That could spell disaster. Try to diversify into smaller caps, large caps, and even mega cap stocks. That will give you a sense of security. Number 5 is beware of scams. Beware of scams. Avoid, pump and dump schemes where stock prices artificially inflated and then sold off suddenly. People with them, the individuals concerned with them, buy with a larger volume, and the stock will appreciate rapidly. And you key into it at a point in time when they get to the peak, they will just sell off their position suddenly, and you will be left carrying the bag. It is called pump and dump scheme. So be cautious of unsolicited stock, stock tips or aggressive promotional campaign. When you see a company being highly or aggressively promoted and it's a penny stock and it's a penny stock, be very mindful of such kind of endeavor. Number 6 is limit order usage. Limit order usage. So in this case, you use limit orders instead of market orders to control the price at which you buy or sell, especially given low liquidity. Don't just initiate an open order, a market order when it comes to buying penny stock, because you may not get it at the price that will favor you. So specify a limit order. In other words, you don't buy above a particular or beneath a particular order, as the case may be, whether it is a sell or buy, or whether it's a buy or sell order. So number 7 is monitor closely. You have to monitor your investment, closely. So you keep a close watch on your investments. As penny stocks can experience rapid changes in value within a short period of time. You will not be taken unawares. To monitor your investment, and if the investment goes against you, you could exit the markets without waste of time. Number 8, focus on fundamentals, not hype. Look at the company critically. Focus on the company's fundamentals. Talk about its balance sheet, its income statements, as well as on the cash flow statements, and see whether it's something that is worth investing in. So make decisions on the company's actual potential rather than market speculation or online forums. Don't be swayed by noise in the market. Make sure that you do your due diligence critically. By understanding the risk and taking a cautious, informed approach, you can explore the potential of penny stocks while minimizing exposure to its inherent volatility. The risks actually are there, but the return potential for penny stocks could be mind-blowing, because they fluctuate a lot. If they fluctuate in the northward direction, you are going to make a huge amount of money. So bear that in mind. The risk is equally there, but the returns could be attractive if you have what it takes to bear the risk.